Is this the end of the once powerful Canadian economy? Day 4. Breaking down the economics behind the headline. The Canadian economy grew by just 1% this quarter, and while growth is usually a good thing, this number raises red flags. Why? Let's break it down. Over the past few years, Canada has experienced massive population growth, adding millions of people to its relatively small population. Despite this, economic growth has lagged behind, and when we factor in population increases, the situation looks even worse. GDP per capita, a measure of how much each person is contributing to the economy, has fallen back to 2014 levels. That's right, on average, Canadians are no more productive now than they were a decade ago. Meanwhile, the gap between Canada and the United States is growing. A weak Canadian dollar is eroding purchasing power, and with tensions rising around trade, the potential for a trade war with the US, Canada's largest trading partner, looms large. To make matters worse, Canada has been spending heavily to keep the economy afloat. If a recession hits, it's unclear whether the government will have the resources to respond effectively. And there's one more thing. Canada is cutting immigration levels. Fewer new residents mean fewer consumers and workers, which could further strain the economy. And as those who leave Canada take their money elsewhere, the economic hit could deepen. So, will the Canadian economy implode? The signs aren't good, but the story isn't over yet. Follow to stay updated on the trends behind the headlines.